Today we're learning more about an executive order the president signed. It is called Democratizing Access to Alternative Investments for 401k Investors. It's a mouthful. Here to break down the pros and cons of this order is Cap and Trust Vice President and Financial Advisor Catherine McCall. So good morning to you. Thanks for joining us. So what is this? What is this? What did I just say?
So basically they're trying to open up the different 401k options to non-traditional investment structures. So alternative investments could be defined as anything from private equity, private credit. So those are non-public companies. That includes real estate investments.
Bitcoin?
Bitcoin is absolutely in the equation. Commodities, oil and gas, partnerships, a lot of different non-traditional
The full spectrum there. Now, a lot of those are higher risk. Like say you were interested in Bitcoin. It's kind of a buzzy, word these days. Would that be something for, say, a younger worker kind of just starting out with a new 401k, or would that be a good investment for somebody who's nearing retirement?
So here's the key here.
Okay, yeah.
I would look at this as where the investment structure is. So what this is offering really is President Trump really loves Bitcoin, and he wants more 401k investors, which is a big pool of money, to be able to invest in that within the structure of their 401k. So employers have a fiduciary obligation to offer a menu of investments. Doing something like Bitcoin inside of a 401k has a tremendous opportunity for growth, as we've seen, but it also creates a lot of volatility.
I was just going to say that.
And an investment that creates potential for complete 100% losses, right? Because that has happened in some of the Bitcoin investments. So that creates a lot of liability on the part of the employer. And my thought from this executive order is that employers need to be really careful about what they decide to include.
That makes sense. So what are the pros and cons of private equity and private credit?
Right. So those have been an investment universe that's really expanded in recent years. That used to be reserved for the private, ultra wealthy, very, very high net worth people. The investment universe in the private market has really expanded because fewer companies are going public. Right now, there's only about 4,000 publicly traded companies in the United States. 25 million companies are in the private United States. So huge investment universe. The drawback to those types of investments is that you have illiquidity, right? They're not going to be able to get your money immediately. In most cases, it's a quarterly. Sometimes it takes years. The other aspect is that they're highly expensive, right? They're going to be more expensive management fees than a public market. They're also more complicated investment structures, just so it's important to understand. I mean, Warren Buffett likes to say that if you don't understand the investment, you have no business being in that investment.
That's just very wise
so
words.
So a lot of people who have these investments, it's really important, especially if you're doing it in something like your retirement nest egg, which is your whole future, I would hope. You got to be really cautious about your participation.
And last question here, why haven't alternatives been included in 401ks previously?
Yeah, so I alluded to it a little bit, but a lot of these investment structures are not regulated, right? So private companies don't have to face the speculation, regulation, and the oversight that a lot of public companies have to face. And because of ERISA, which is that retirement law that basically says, here's how much the employer is obligated to take care of the employee in terms of those rules to do right by them. At a basic level, most of the alternative investments up until now have not met the criteria as a qualified, suitable, in their best interest investment.
Okay.
So this is opening up that debate.
Yeah, and a lot more to come on this, too, as you see this kind of play out. All right, thank you. Always nice to see you. Brandy?